it and don't let me forget, because I get to doing things and sometimes forget these things. Okay, I want to make sure I have it right up there. All right, so we're doing chapter 4. We are going to do just a couple little of these situations to kind of get our brains ticking from chapter 3. John and Stella, oh, and like I said, we'll look over that 3 quiz. If it's the ones you're going to do on the computer, I won't give you those answers. That way you can take them on the computer. If not, I'll give them for you. Okay, John and Stella are married and live together. Both are employed. John is very independent and will not file a joint return with Stella. Which one of these would be their filing status? So they live together, they're married. John's independent and he will not file a return with Stella.
I'd say married filing single.
Okay? Get it to work. Work for me, please. Do it. Nope, I don't want that. It must have kicked me out because I took too long. Okay, I'll get back in there. Let's try it again. There we go. Married filing single.
All right.
I knew it. I just wanted to
Makes
do
sense.
that.
It just makes sense.
But should we ever let them do that ever?
No.
No. 99.999% of the time, no.
But he's not single, see? He's married.
Right. So usually, though, we want to kind of convert him to join if there's a reason. Matthew's unmarried and lives alone. He pays over half the cost of keeping up his father in a home for the elderly and claims him as a dependent.
HOH.
Ooh, let's see. HOH. And why is it HOH and not something else? Well, it's the father. He's legally and biologically related, and he's paying over half the cost of keeping up a home or something, and he's going to claim him as the dependent. Now, if that would have been his girlfriend's father,
You'd have to be single.
right? Yep. Okay. Rita's 20 years old and unmarried. She lives with her boyfriend, Allie, who's a full-time student and does not work. She works at the campus bookstore and provides all the cost of maintaining the home. Does she have anybody qualifying that would make her HOH? Anybody legally or biologically related that we know of?
No.
No? So what is she?
Okay, he's not related to her. Okay.
Nope.
Still have to be single.
Married filing single, yeah.
Yep. No, not married, filing single.
Of course, they're not married.
Unmarried.
Yeah.
Ken is a stockbroker. He divorced his spouse, Phyllis, on December 30th. Their 2 children live with Phyllis. She pays over half the cost of keeping up their home. What is Ken's filing status? So you are what you are at the end of the year. What were they at the end of the year?
They were married.
Nope.
I mean, divorced.
Divorced.
Yeah.
So if you're legally divorced, you don't have a choice.
Yeah, on the last day of the month, yeah.
Yep, last day of the year.
Last day of the year.
Okay? The children are with mom, and she's paying for the house. So what is his status? He's single. We don't, as far as we know, she's not giving him those kids to claim, and she paid for everything, and they're no longer together. So she's HOH on the kids, and he's just single out in the cold. Okay? Karen is divorced and was providing the cost of raising her daughter until her daughter died suddenly in January. Karen maintained the home during the period her daughter was alive.
Qualified widow?
That's only if the spouse dies, not the child.
Oh, okay.
HOH. Yep, because remember,
That's right.
even though she took care of the house for a month, that was good enough for tax qualifications. Okay, David pays the full cost of the home in which he and his 23-year-old daughter live. Okay, she is not, so he's the dad and he's got a daughter, so we know there's that relationship.
And he's paying the full cost.
That's right. She's not a full-time student or disabled. His daughter owns $41.50 and does not qualify as his dependent. Okay, so I think this is going to come down to as far as the income. She doesn't qualify as the dependent. Her wife died, and I'm pretty sure that income level,
too high.
It's too high. I think it's too high.
So
Even
you-
though there's not an exemption anymore, I think that's
Well,
going
if
to
he's
be
paying
too high.
for everything that costs him, he'd be HOA. Were you single?
Nope, and you know why? I think he would be qualifying widower.
Why not? don't understand
Her
that.
age,
Because she's
over 19,
over 19.
and not in school. Yep. Because I think if she was in school, the age is 24, he could have done qualifying widower as long as it was in those 2 years.
I see.
Yep.
Okay, because I said that's,
Yeah. You knew the 2-year rule, but I think it's her age kicks her out.
okay.
Not a full-time student, age kicked her out of that, and her income was
And you
over.
could be claimed until you're 24 when you are a full-time
Correct,
student, right?
Yes.
And I will say, they could try to go to the qualifying relative if they're over that amount as far as the income. But it's kind of a hard sell when they're older. It's really hard to claim an older adult. Most of the time it's going to be if they're disabled or something of that nature on anybody, qualified relative or child. Usually it's,
They almost need to be disabled.
Right.
If
Oh,
they're
yeah.
older than
it's really hard to
19.
claim an older adult. Okay, did we not move on? Moved on in my screen, there we go. Whoa, this is a wordy one. Okay, we'll let this one be the last one. We'll go on to our lesson. Aren't these are the fun ones. Shiloh is unmarried and live all year with her boyfriend, Sweeney Todd, and Sweeney's 10-year-old son. So Shiloh is not related legally to Sweeney or Sweeney's son. So Sweeney is the older male figure here. He does not know how to locate Johnny's mother. He was a bouncer and earned $5,000. He will file a return only to get his withholding back. What did we say about someone that files to get withholding back? They're not HOH, right? Because they didn't make enough, remember? They're only filing to get back. So Shiloh is a lawyer. Wow, she stepped up. She provides all the support.
Half the support.
Shiloh meets the test to claim Johnny as a qualifying relative.
Let's see, just a minute. Johnny, more than
Johnny's the
person
son,
of keeping up with the home.
But he's not related.
her
to
son.
her.
He's not her son. Nope. So what is her filing status? Because remember, this isn't just talking about can you claim them as a dependent. This is talking about for that HOH
She must be
status.
single.
It's single, okay?
Shiloh meets the test to claim Johnny as a qualifying relative. How could she meet the test to claim him?
Qualifying relative, just itself to get a small, we used to call it dependent exemption. You only have to be a relative of the household. This is qualifying for their status, okay? It's very confusing, and this is what people have the most trouble with. This is not saying, I want to claim them as a dependent,
Okay.
qualifying relative. This
They're
is
just
talking
going
about
their filing
status, yes. Because you can be single and claim someone as a dependent,
Yes.
okay? But you can't be HOH because they're not legally or biologically related.
Right.
And it's a little tedious in the system to get it there.
Yeah.
So it'll be fun this year with the new software. It literally took me 2 or 3 years to understand this myself. Literally to where I was like, okay, what are we doing? Okay, so we can have the one or the other, but we may not be HOH because there's not the legal or biological fit. So it's always single if that's not there. Okay, you and I can take their exemption, but remember the exemption isn't what it used to be. That whole thing. There is like a $500 other credit exemption, and I think we'll get to that probably later on when we talk about credits. It's really odd. It used to be a lot more money. Now it's not as much. It's just a different credit. That you can get, but you can't do the HOH. Okay. We're gonna skedaddle on past all these little, I love that they do little reviews, but okay. Wages, salaries, tips, self-employment. So what they've done that I've noticed is they've put more self-employment and other little oddities about income into this chapter. These items will be very important. I've printed out quite a bit of documents there, so if I say, hey, take this note down, it's just because I didn't want to kill the trees on that page. Did I print this one out?
Yes, ma'am.
Okay. So we've got earned, and unearned. Okay? That sounds like that would be pretty self-explanatory. You've got earned income. I went out and I earned that right now. Okay? Unearned is like an investment. It's sitting there, something that came to you. You didn't go out and work for these last few weeks. That's unearned.
Interest is an unearned
Correct.
Right?
Very important when we're talking about earned and unearned. Okay? Non-taxable income. There are such things as non-taxable. Will be on your test. You will get these questions every year when you work or if you do taxes or what have you. Non-taxable. If you can't read them, be sure and write out to the side there. Child support, tax refunds, interest on municipal bonds, public assistance, workers' compensation, most life insurance proceeds, a portion of Social Security benefits.
Federal tax refunds.
That's talking about,
It's not taxable.
correct.
Like
Correct.
if I got a refund.
If she got a refund this year, they're not going to come and tax her on it next year. There's no way to report
But they
that.
do on state, right?
Correct. In some instances, yes, you are correct. And we will talk about that later, yes. Some instances, they do tax the state. But we get asked these like every day and twice on Sunday.
Portion of Social Security benefits, what portion?
There's a formula that we will talk about later.
Okay.
Yep.
That's right.
It's each and every one's different.
Okay.
Depends on the makeup of the tax return.
Right.
Yep. So that's the part that's tough. We'll get people that'll call and, hey, I want some advice on this and kind of how does this look? And we try to give them the best information we can. And then there's some people that don't understand that a portion can be taxed and they get mad. They come in and they're a little older and they've worked, or husband's still working, and they're like, what? We find it most often in our offices locally. It's retirees that are younger retirees and they've gone out and got other jobs. Or they've gone out and they're self-employed and are driving a truck or doing, and it's like, just go home and don't work. All that's going to be taxed, which is fine. Just telling you that, you know, your self-employed is going to be taxed over here, and then your Social Security is going to be taxed over here. It doesn't make for a good tax, you know, situation.
If you don't work, though, you don't pay tax, right?
Correct. Yep. Correct. Yep. And there's a different scenario as well if you both get it, and if you're married, you're allowed to make a little bit more. So we will show you guys that. Common types of income, wages and salaries, tips, any compensation in the form of cash, services, and property. I will tell you right now, this new revamp of the system focuses way too much, I think, on tips, because there are questions on the competency exam about tips, but as far as us seeing it in office, we don't see it a lot. They put everything on the W-2 normally, or they're supposed to. Every now and then we'll get a question. I will discuss the tips, but I don't focus it as much as they do. Obviously, cash, services, and property, very important.
A lot of people take cash instead of a check, though.
They do.
No one can find it out.
And it is the underground economy. And, you know, the IRS would love for more people to claim their cash, but they don't. I will say they don't. They probably should more often, but they don't. So we've already talked about this, you know, your W-2, your wages. Now this one up here, that's because that's usually line 1 of the 1040 is where the wages are. That's what that little 1 is. It's just to show you whatever's in box 1 will go on 1 of the tax return. Okay?
W-2 and the 1040.
Correct. And it does combine on your final form, okay? If you have a spouse, you're going to see all of it together. There's no way on the 1040 if you're just looking at it and it's 20. If she made 22 and he made 20, you're going to see 42. So it can be a conundrum later on if they need to make changes because we have to go dissect that a little bit. But yeah, it's all combined on that line 1. And then all the other incomes have different places as well, and we'll get into just a few of those. I don't think I printed this out. It's pretty standard, but employees are supposed to provide this by January 31st. You might want to write that down if you don't already just know it
I knew it.
from working. Box 1 is where the wages, tips, all those other things are, and they're entered on line 1. So if you think box 1 on the W-2 goes on line 1 of the 1040, kind of an easy reminder for your quizzes. Okay? 50 bucks is probably the box 1 amount. Okay. There are some W-2 boxes that provide information about box 1 that may or may not be entered. Okay? That's just saying there might be additional boxes on there, but they won't go on line 1. Okay? And the gym is ramping up next week here. Anything that's on gym. Statutory employees. If you're a statutory employee, your income will be reported on the W-2, and the checkbox box 13 will be marked. I do not get a lot of these, but they'll probably have a random question on your little exam. It's just box 13. That's where they leave it.
What does statutory employee mean? What does that?
It includes full-time life insurance agents, certain home workers, and traveling salespeople. Okay. Now, if they mark this, you might be able to do a Schedule C, profit and loss, and carry your net income to Schedule 1. Okay. I've not had a lot of people use this yet because this just changed the last few years where you couldn't have as many deductions. I've not had a lot of these returns. So I'm definitely not the expert in statutory tax returns per
Well, those
se.
kind of people, though, the insurance people and whatever, they would, if they would come in here, they would be a statutory employee.
Correct. If it's marked on the W-2.
If it's marked on the W-2.
Right. If it's not, it's just regular. Yep.
Okay.
And a lot of times they do not have related expenses. Sometimes their employers will pay for everything and they may not have it. That's what I get a lot more of these days as well. I traveled, but they've covered everything. So,
That's all goes on the boss's report, right?
possibly, yes. And then they just claim it as income.
Okay.
Let's
Because he's
see.
claiming it, that's why.
Yeah.
In general, box 1 of W-2 shows the total of all your income. If you receive tips, you also have to add that, not included in box 1. The income shown in box 1 is your gross before your employer withholds state and federal taxes. We know this, that's gross. What you want to look out for is every W-2 is different. A lot of people get surprised at that when they start doing people's taxes, that every company can have a different look to the W-2. So sometimes you're left like looking for things like what is this? We also have to make sure everything's aligned properly when we're physically looking at them just to find the numbers. Sometimes you'll have instances that will happen where the employer's forgotten to take things out of the W-2, or maybe coming up in a minute, we'll talk about the W-4s. Y'all both feel like probably tons of those in y'all's lives. W-4s. They put that at the end of this chapter for some reason. I was started with a W-4, but that's me.
Just some people, though, would look at that and say, all right, he made $15,000, put that down. He made 200 in tips, put that down. He made this, and they just add it all up, but it's itemized, isn't it?
Correct. It's in its own box. And I don't like the way it's worded either. And secondly, a lot of restaurants don't report it. They leave it up to the employees. And do you think they come tell us they made tips?
No.
So I'm like, I'll give them the right information if they ask, but unless they ask me, I mean, I don't know. But usually they do report it on there. And that's just kind of telling you about the boxes. We've gone over that as far as the boxes. Wages and other compensation, tips, regular pay, bonuses and awards, sick pay. A lot of those will be put on the W-2.
That's not fair. Sick pay.
I know. Now it's gray, I think, because that's either or, probably depending on how they code it. Because I don't know, have y'all heard of the codes? We talked about it briefly in our first meeting on the W-2. There's always a code. At the bottom, there'll be codes that you can enter in. And sometimes, if it's something special, it'll have a certain code that goes with it. There is an extra training on codes in our training stuff, and so I might show y'all that when we get later on. But codes will be something you'll get used to. You will definitely get used to.
What are you talking about?
Right here.
Yes.
Yes.
Okay.
And there are drop downs, so you can learn all about the different codes. If y'all want to Google it too after class or when you're kind of doing your own stuff, there's a list of different codes. And employers use them, and so usually that's how you know. We got holiday gifts, severance pay, reimbursements, employer-provided vehicles. All could possibly be reported on box 1. And that's just informational for you to know. I'm sure there'll be questions on your competency exam. Could this be reported in box 1? But any kind of payouts like that could have been put in there with it. There may not be a code. We may ask the client, and that's when they're like, oh, no, I did get some of this, but it's all in box 1. Okay? Where we have to worry is if they're not sure. Because then it's like, okay, who is this on to determine? Is there something floating out there that was supposed to have been reported and wasn't? You do get into that tit for tat every now and then. Sometimes I'll tell them to go ask their employer, because we sure don't know how every employer reports. So it is kind of up to them to kind of be involved in there.
Anything they get income from.
That's right, that's right. It's like, you need to go ask your employer. We don't have a, and that's the other thing too. A lot of places, due to privacy laws, will not just let us call their HR. You know, a lot of them, they're so busy, they may not even be able to answer the phone type situation. So there have been times where if we see something funny and they can't get a hold of them, we may have to send them away. Now, usually if it's that sort of situation, I'd have you roll it up to me, or I'd say, when in doubt, put it as it's marked, and let them take it up later.
It's their responsibility to prove it.
Correct. It is, and that's what I've told people throughout the years. I said, we can't assume everything on there is wrong. We have to assume it's correct.
Yeah, right.
You know, because we don't know. Burden's not on us. We legally are bound to report complete, accurate returns to the information we're given. So the biggest thing is if there's blanks. Okay, if there's something blank that we know is not supposed to be, or, you know, other than they just forgot to take out your federal taxes, and is there anything you can do at that point if they didn't withhold for that previous year? There's nothing we can do. We have to report it as it is. And you'll see them. You'll see them, but they come in and they're totally clueless. They haven't watched it for a year. They didn't even notice in their check stubs that was happening. And so it's pretty sad when it happens because a lot of people count on that refund.
Yeah.
And so it's like shock and awe if it happened and someone didn't catch it. Because sometimes it's not their fault. Sometimes if they change softwares at their company, they change HR departments, they change third party that does that. I've seen so many typos and then, well, I'm not single, I'm married. Why does this even say I'm literally single? I had it married or vice versa. I used to withhold at a higher rate, you know, and it's just someone coded it wrong, you know, or what have you, or they were supposed to go in and update it somehow. So I have to kind of keep an eye on that. Likewise, because you guys you've worked for a while, you know, if you see that someone's under withholding, it's definitely in our realm if you know, hey, did you know if you pump this down to 0 or if you hold out more, that's going to help you? You're definitely within your frame of reference to discuss that with the client, okay? We will talk about that later when we do hands-on training on the computers, but definitely something you can tell them. If you notice they should be holding out more, just bring it up, because a lot of times, 99% of the time, they don't even know it. Nobody's told them. They don't know. They're doing good. Half the time, from what I've heard, they come in here, they're doing good just to get somebody to talk to them, like Frank was talking about earlier. Some places just have you drop your stuff and take off. So you don't even know what is in your stuff.
I've raised my withholding twice in the last 5 years.
I make sure
And still don't
mine's
have enough.
Yeah.
I'm trying to sure mine's not either.
I've got to take some home. I mean,
That's
I
right.
buy
Well,
groceries.
and that brings me to, so my husband, he's in sales. And so, but he had a storefront for years, so it wasn't traveling sales. But part of his pay was a bonus. Well, the way they have to tax it, they tax it at a higher rate. So it's like 28 to 34% tax. We literally had to keep raising ours because if we had it at a 0, they were pulling like 20-something thousand out of his check, and we were starting, you know, we're like, we got to bring some money home here.
Yeah.
And so we get these really nice refunds, but during the year it was like, where's all the money? So we finally had to do a lot of adjusting to his payroll the last few years. Okay. All cash and non-cash tips received from customers are taxable income. Report to your employer cash, check, or credit tips of $20 or more for any 1 month for any job. Now, this is one of those things, this is a good tip for our clients. But if they're already to the point in our office they haven't done this, report your employer cash, check, credit cards, 20 more for any one job. That's great, but we're doing it after the fact.
Does
So
the employer have to keep track of that?
yes, they're supposed to.
Wow.
So this is kind of more on them, employer and employee relationship, but I think it's just for general knowledge. But they are supposed to report tips of 20 or more. Okay? That's a good gauge on that. So you might want to write that one down. And let's see. And this is just another little, like I said, they get kind of tip happy here. Do not report tips under $20 a month to your employer. These tips are subject to income tax, but not Social Security or Medicare. Add these tips to box 1 wages. If you do not report your tips to your employer, also add these tips to the amount on line 1. I've never had anybody do this in 9 years.
If you did not report tips of $20 or more per month to your employer, as
Add these to your
required,
amount. Now, when I waitress, they made us turn them in. So our owner went through them. Like she would ask us to report each night or each week, whatever it was. So a lot of times you don't deal with this, but it could come up on your competency test. So, you know, the client or employee would need to report tips to their.
We better be thankful that not most of them know the Bible that, because we
Wait, we're like, you're wanting us to add stuff to the tip for you? What? Oh, goodness. Okay, I'm going to skip it. Like I said, they go tip crazy for me. I'm like, I have never seen so much stuff about tips. Okay, Medicare waivers is another one. I have not seen myself a lot about this in the last few years.
I've got a son that's
You've
on
probably-
that has a Medicare waiver.
You've probably dealt with it a little bit. Provides guidance, certain payments to individual care providers for the care of eligible individuals under state Medicaid, home, and community-based services. Under such program, the care recipient can receive required care at home instead of in a hospital or nursing facility. The qualified Medicaid waiver payments will be treated as difficulty of care payments excluded from gross.
Okay.
So if I was summarizing that, I'd just say if somebody's getting extra money to be taken care of medically, we're not going to include it in their gross income. They make it super wordy. There's like 4 other slides, but this is the main thing to realize. Yet again, I mean, I'm not sure what they're saying there as far as if they have to tell us they have this waiver and some of that income's going to it. And you may be more versed in this. I'm not. I've not seen a lot that have come through with Medicare waivers. If they haven't, I would think they would at least know for us to talk about it. Okay?
There's a version of the Bible that will take Jesus wet and make fairgrass out of it. It just explains everything. I mean, and that's one of those things there.
Yeah.
And I think the big thing with it is, I don't know if it's like pulled out of the income to go to pay for this, and that's why they're saying you don't have to include it, because then this talks about if you and the care recipient share a home, so it would be a specialized situation. So this is one of those in reality, if they come in and they say this is a special situation, I'm pulling them aside and I'm looking through this with a fine-tooth comb because we don't see it every day.
Okay, so that's what we say.
Yeah, that's what we say. Help!
He's living in a home, and I don't think we've ever had that.
Yeah, and correct. And so this other one was just saying, if waiver payments were reported in box 1, if it needs to be excluded, you'd have to go through a different way to exclude it because you don't need to be taxed on it. But like I said, if they don't tell us, we may not even be able to tell by looking at the W-2.
Yeah.
You know, so it's one of those things.
If they don't produce a W-2 for it, then...
Correct. Yet again, I think it's more informational, so it could pop up on that exam. Are we going to see it in real life? We may never even see it. Some of these I have seen on the other form, line 1 income, taxable portion of scholarships and fellowships. We have some people that will refuse to do like their education credits because they know they're going to get taxed on their scholarships, the excess of scholarships, so sometimes not even with credit. So we have to be careful with that when they have school reportings. We have to kind of really be careful with that. I usually go ahead and put them in. And then if there's a situation where I notice there's a way you can tell, we'll show you guys later on. But if we notice that, we may have a discussion and say, okay, do you want to claim this to get any kind of exemptions or not? Household employee income not reported on a Form W-2. They made a weird rule a couple of years ago. This could be on your test. I don't recall if it, I think there might have been 1 or 2 questions. The IRS changed some stuff a couple of years ago where if you worked for someone privately, so say I had a nanny that took care of my kiddos. I legally, if I tell her when to be at my house and what to do, technically, even though she's one person, I have to report a W-2 for her. Nobody really does this, don't say that. But technically, if I tell her when to be there and what to do, she's my W-2 employee, even though I should get an exemption because I don't have that many employees. In the past, she would have just been her own 1099 nannying service, right? Schedule C income, we'll go over that in a minute. But they're saying if you tell somebody who's at your house what to do, you control their schedule, you tell them what to do, they technically should be considered a W-2 employee.
Even though no taxes out, right?
Correct. Even though most people don't do that because why are you going to go register to have one employee and go get a tax ID number and go do all this crazy stuff? Nobody in their right mind is doing this legitimately, to be honest.
No.
They're probably just paying them in cash.
Yeah.
But that's what they say the new rule is on that. Non-excludable dependent care benefits. This goes back to those codes. Some companies will put that if they've paid daycare costs. It'll be on the W-2. Okay, so it's also taxed if it's not excluded. So they paid more into an account and they didn't use it, something of that nature. Same way with adoption benefits, and then disability pensions received prior to retirement age may or may not be taxed. It'll roll them up there too. Yet again, all that should be determined by those codes on that W-2. We're not investigators. I mean, we try to be the best we can, but we can only work with what's given to us and what's said in those conversations.
Right.
Okay? Do they leave stuff out all the time? Yes. But we only can do the best we can do with what we have. Yep. Okay. Tax-free, tax-deferred, pretty common. Tax-free means it's not included. Taxes not paid on it. For example, group health insurance. Tax-deferred means it's taxed in the year it's withdrawn. For example, certain retirement plan contributions. Tax-deferred is on down the road. Tax-free means it's not taxed. Okay? That's just some of those definitions that could come around.
Means it's going to be paid sometime later.
That's right. That's right. Deferred compensation is not included, so you'll notice sometimes when you look at a W-2, you may not actually know for sure why when you're looking at the W-2, but you'll notice sometimes the box 1 number is different than Medicare and Social Security. Could be because there's some of those situations that things weren't taxed because they didn't have to be. So that's why the codes at the bottom are important. That's why it's important to get the boxes correct when you're typing in the W-2. Because if you look at that W-2, you've got Social Security and Medicare. Sometimes these will be the same, sometimes they'll be different. So we have to just try to replicate all that information as we're doing data entry. So that's just, that's what it's